What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online as usual. Today is or I think actually we got them yesterday, but I got the email today. Well, now it's after midnight, so yesterday, but the funds came even the day before, that it is dividend day for Mogul, right? So I started getting payouts. I'm just going to give you an update on my portfolio, where, what my returns look like, how they compare to what I was expecting. Have a little bit of a disappointment in one of my properties, but the rest of them I'm pretty happy with. I also I'm going to, one, looking for some crowdsource knowledge about, am I misunderstanding how the clubs work? So I'm going to mention that. And then also, it took me a little while to replicate their yields, and so I wanted to show you how they do that because I think it wasn't immediately obvious. And whenever I'm looking at somebody else's numbers, I want to make sure I understand how they're doing them. Anyway, one of the things I thought was pretty great, they're pretty proud of these three pad split properties, the monthly yields, and they're three properties that I happen to own a piece of. So that made me feel good there. But they always send out this. There's not much of the clear left. If you've watched my video, if you haven't watched my video on that, please feel free. I decided not to invest in that one. A very long explanation as to why, but you can take a look at that if you want to. Which reminds me, please like and subscribe if you haven't. Also, in the description to this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on those sites. Don't just invest there because I have. And also on any of the properties. Just because I buy into some of them doesn't mean that you should. I'm sure we have different risk profiles, different goals, all that sorts of things, different time horizons. The other thing, there's a link to the Discord for fractional real estate investors that I set up. There's about 70 of us in there now. So, quickly growing. Discussions in there every day. Sometimes they tend to be a little childish, but there's a lot of good info in there, related to a lot of the different platforms. So please check that out. And also, I do have a playlist for Mogul. So all the investing that I'm doing on here, any of the properties that I bought into, and even the ones that I've passed on, I do have videos up for that. So first, I wanted to ask about the clubs. I keep getting these notifications. Club members has invested. My rewards are on the way once the investment settles. I haven't seen any rewards actually hit my account. And I think what's happening is based on my understanding of how the system works, is that I joined a club. I joined the 400 club. I think in the long run it's going to be good because it's got it's formed by the guys that formed Mogul, and they pay out the 2%. So I think it's a good club to be in. I put a link to that in the Mogul, in the Discord, in the Mogul channel. Um, but I think that they have a lot of money invested in there. And so right now, the amount that I have so far, because I've only made one small investment since I got on there, so my percent of those in that club is very small. So I think that's what's happening. I'm not 100% sure. I did post a question about that in that club today. So if I figure that out, I'll let you know. But yeah, let me know. Let me know what that's looked like for you guys. I still think in the long run it will be better to be in that club because I think there will be one, I think there'll be good info in there, and that's really like, it's nice that there's this extra 2% that's getting spread out, um, amongst the club members. But I really think that getting the benefit of talking to the other people in there, it's one more place to access the actual founders of Mogul because it is their club. So we'll see. I think that was my thought process when joining it. I know some people are in some different clubs, so anyway, let me know if you've actually got rewards from this, and if so, if I'm just missing something. But I think it's just because I've just made such a small investment so far that it's like maybe I'm getting rewards, but it's like a fraction of a cent right now of each of these is my guess. Anyway, as you can see, I don't have a ton of money on Mogul yet, right? I have been being very prudent and and measured in my approach here because they put out a lot of properties and they put out a lot of good properties, and I want to be able to I'm trying to get the maximum amount of experimentation with not a ton of money until I feel really comfortable with the platform. My thought on all of these is that I was probably going to wait about a year of experimenting before I put a significant portion of my net worth on any of those sites. I've gone a little bit bigger on Lofty already than I have on any of the others. Still not a ton of money, but I've done it because it's tougher to experiment on that site without more capital. Because early on, I was like, wow, I can just make unbelievable returns. But it's really because you can pick up one or two really discounted tokens. But if you try to invest a lot of money, the slippage makes it tough to do that, right? And so it's easy to deceive yourself if you're just playing with that site with just a little bit of money into thinking that you're just going to make unbelievable returns. I still think you can make great returns on there, but it gets harder and harder the more capital you're trying to put to work on that platform. That's not how it works on Mogul, and so making these really small investments for now, I'm getting just as much information as I am otherwise. When I did the first one, I had just put a bigger chunk because I didn't realize how often they'll put out new properties because they hadn't had a whole bunch when they started, but it seems like they've just picked up their pace quite a bit. Anyway, that's it about that. A couple of things. So I really am enjoying this new user interface that they added where it's giving me some numbers. I always want more info, right? More info is better than less for me, especially somebody who's going to just spend a lot of time digging into this stuff. I'd like more than just an OpEx line, but for now, I'm pretty happy with this. It's nice to be able to, it's broken down by property, but then it's also like if you look at the individual properties and you click on breakdown, you can see them individual, right? And so you can see, okay, OpEx isn't something that expands. It's really too bad because, in February we had much bigger OpEx than any other month on the Axelrod. Is my most disappointing yield this month. It's also, it's a short-term rental, and so there's going to be ups and downs. So I'm not at all worried about it. I still think that I'm still very happy with this investment, but it is, this one started off amazing, and so, a little bit disappointing, but I think it's to be expected. But I'd really like to be able to know, like, okay, in a month that we have twice as much OpEx as the month before, what happened there, right? And they are in some instances adding these memos. This is just about a different property, the WAGs that I own, mentioning that it's going to be live soon. But it would be nice if, if they have some outlier months for certain reasons, if they do even more, or if they just let us dig into this one, right? Like if I could click into here and see, oh, they had some, additional cost that is maybe one time or maybe quarterly or something like that. It'd be nice to know. I think, it's going to always be a balance that they're going to have between the more info that they give us, the more questions we're going to ask, right? And they have not the biggest team. They're trying to, they're relatively lean and they're trying to get a lot accomplished. So I kind of understand. And I was going through the operating agreement because I'm that level of nerd that I like to read operating agreements. And I realized like they do have right in there. And I think you should. I think you should read it at least once. Going back and reading it multiple times is, sometimes I was just curious about something and I was digging into it. But they have it set up so that if anytime if they think for their own in their own discretion that they shouldn't share some additional info with us, they're allowed to. I don't love that because I'm always a big fan of transparency, but at a certain point, I can also see like they don't want us sitting here like asking, okay, why did utilities go up $13 this month, right? So I think there's a trade-off. I would like a little bit more, optics here, be able to dig into it more, but I think this is far and away a lot better than what I've seen in some other sites, and it'll at least give me some amount of insight into what's happening. It's in like these last couple of months, it's a short-term rental. It just hasn't been as full, right? Or their rates haven't been as high. That'd be kind of neat too, right? To see the occupancy versus the average daily rate. But again, just something I'm interested in seeing. Not necessarily that I need it, to be comfortable here. But obviously all these numbers are good. But this is one that I wanted to explain because I was trying to recreate their numbers for some stuff. Um, and so, I put my little spreadsheet together here, and I was having a really hard time duplicating their um, this number, this annual yield, right? And I realized it's just that I'm doing lazy math. So the monthly yield is just taking whatever that month is and dividing it by, um, or no, so the whatever the rental income payout that month is divided by the total investment, right? And so if you look at that, uh, yeah, I mean it was easy to duplicate that exactly. Like this is just this divided by that. And so from that perspective, like this was kind of a sad month, right? Like 0.36% yield, right? $18 versus my first month on it was $50, right? So but I mean I was blown away by this, and this is disappointingly low. I think I actually didn't leave that calculation up, but it is it's that 0.3%. Like if you annualize that, 0.36 times 12, I'm only getting, it's only a 4% cash on cash. But I don't expect that to be annualized, right? This is hopefully this is one of the lowest months. So it doesn't necessarily make sense to annualize that. But what they are doing is then also looking at your cumulative, adding it up each month, right? And then giving you an annualized yield based on that. But these are the numbers that weren't coming out right for me. And I realized this because I was doing daily math. So it's like, okay, this is 1 month, multiply it by 12, right? And so 1.01% times 12, well, that doesn't equal 11.85. Like what's actually happening there? And they're right here. And I love it when I dig into numbers that look wrong to me and I'm like, okay, they're actually just being a little bit more diligent. They're not just multiplying by months, which is like the lazy way to do it. They're saying, okay, we made this much money. It was 31 days out of 365. And so then the next one is 31 plus 28 times 365, right? Like so they're actually doing it by day. And when I did that, it matched up with what they were doing exactly. Um, this sort of stuff does bug me if I can't figure it out, right? Like, and so I wanted to, whenever I'm looking at somebody's calculator like this, and it's not an Excel sheet, so you can't just click into it and figure out what they're doing. um I'm kind of embarrassed to say it took me a little longer than I would have liked to realize what exactly they were doing. It didn't, because it's close, right? I mean, 11.85 is close to I don't know what it was, the 12 point, I guess 12.12 or whatever it was supposed to be. But it wasn't, it was far enough off that it made me realize that I wasn't doing it the same way they were. And I think that, like, this is the sort of thing that I think as a group we should really be doing. Um, like I've talked about this a lot of times when we're looking at Lofty's financial projections and annual, the way they annualize things. And just sometimes like the numbers are just like so misleading if you just look at it and you think it's what a lot of normal people would assume in certain instances, especially if they've invested in real estate a lot. And so anytime there's a new feature like this on a platform, I'm always going to try to recreate the math. I'm going to try to figure out. Now, obviously, these inputs I just have to take for granted, right? Like, I mean, there's not a good way for me to check that. Although over time I can compare, you can compare the totals using some third party websites like AirDNA and uh, awning.com. There's a few different sites where you can go and actually pull up the individual property. It shows up as a comp and you can see what it's earned over a certain period of time. And so you can figure out like, okay, is this matching up somewhat to what we're expecting or whatnot? Um, but anyway, yeah, I think as a group, we should always be digging into these. And I know there's some people doing it that have done it a little bit more on Ground Floor's flywheel portfolio. I just haven't really been into that because I didn't invest in that. It to me, it sort of it took a step away from being fractional real estate, but I appreciate that people are sharing numbers on that. Um, but yeah, so anytime I dig into this and I can't recreate it, I'm always going to ask the question, or because sometimes in so far, I mean, I think Mogul, and this is why I really enjoy their platform, and is their, I think they are really diligent in the numbers they put out. They are well thought out in the way they're calculating things, and so that for me made me really take the time and figure out what I needed to change to match what they were doing versus like on some of the other platforms, right? At this point, if I can't get them to match up, I just assume they're wrong because they've been wrong so often. Um, and so that's, I mean, I don't know. It's kind of sad. I still do spend quite a bit of time doing that. But anyway, I actually want to just go into the each property return, right, and let you know how I did actually. So let's see. I showed you the let's see, monthly yield, annualized yield for each of them. So the Axelrod, so far 8.4%. Like I said, I mean, that's including that 4% month. It's still a fantastic cash on cash return. Like, go out and try to buy a property, um, and get that type of cash on cash. It's not easy to do. I also think that I also think that it will go up as the year progresses, right? I think that we probably are right now have one or two of the worst months being averaged into the total. We'll see though, as far as for short-term rentals, this could be a tough year for them, which is one of the reasons that I'm pretty happy. I think the Axelrod we actually got a really good deal on too, like relative uh, to the price of the property, right? And so if it turns out over time that this isn't working out, I think that there's the potential to sell it and be perfectly fine, which is why I'm always talking about yield is temporary, basis is forever, and why I really care a lot about, are we paying too much for certain properties, right? If you've watched some of the other videos in the Mogul playlist, you'll see why I mentioned that here, because I do think on some of them, uh, I've had a hard time getting to the valuations that they are, and those are the ones I'm just not buying. Right? It doesn't mean that you shouldn't, but you wanna dig into that yourself. Um, but yeah, so that my worst yield annualized is 8%. Like, it's pretty fantastic. The Rhodes is just killing it at 12, the Mafi is 16, obviously. Wait, that was a little bit weird though. Oh, no, 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 that's right. That's right. It started off even stronger and went down a little bit. And the Victor's doing well, right? And so, these are the annualized numbers of what they had put out as far in that chart. Although one thing that I did think was a little bit weird is if you look at let's see, looking at my monthly yields, one of these, I think it was the Rhodes, they had it listed at 1.15 and it's 1.11 here. I'm not really sure if that was just a typo in their email or what, but especially because it was in an email and not like I could recreate what they've got here, so I'm perfectly happy with it. Um, but yeah, I think for me, it makes sense every single month when I get my dividends. I'm going to take a look. I'm going to see, like, did my gross rental income, what's that trend like, right? Like, did we have a weird month? Because, all of this stuff, no matter how good a platform is, there's always room to make mistakes here, right? We could have you could just have a data entry error. You could have, if you start to see some really negative trend, it's something I'd want to ask about if there's not a note for it. One of the things I think is interesting. So this one, this $9, this was some appreciation that they mentioned. When did this happen? A while back, like the first or second month that I own that one, but we haven't seen it for any of the others yet. I think it makes sense. I mean, to have some already for any of the properties that I've bought is surprising. But yeah, I think it's just a prudent thing to do for us to dig into, the numbers that we can see each month. The property taxes, it's something that you can look this up, see if that matches up, right? If the debt service fluctuated, that'd be something that we'd want to know about. I don't anticipate, I think they've got some really good operations here. I don't anticipate catching errors, but I do this on all the platforms, right? I'm always trying to make sure that the numbers that I have and my expectations are matching up with reality. And if they're not, I want to understand, what I'm missing, or, sometimes it is going to be that they've got something either wrong or that they're doing that is just like really counterintuitive. And that's what, like, when you're on Lofty's platform, some of their stuff, it's very weird, but it's not necessarily actually wrong. It's just uh it's just wrong if you ask the average real estate investor how numbers should work, right? It's not wrong if you relative to what they're saying they're doing if you like look at the info buttons and stuff like that. So, um, anyway, I think the more that we all as a group dig into whatever numbers are presented to us on all these different platforms, one, if there are things that are done weird, we can catch them or we can explain to each other. That's why I wanted to share this calculation because this was going to just bother me to no end if I didn't figure out, um, why 12 times 1.01 wasn't adding up there, right? But it was obvious answer once I spent a little time thinking about it, right? Is that they're actually looking at individual days, which makes a lot of sense, right? I mean, especially because for the short-term rentals, it's a daily rate that you're getting paid, right? So February should be worse than most months. Now, it's interesting. It's actually the best month on this list. Is that, yeah, that's the Axelrod I'm in. Oh, one of the other things that I thought was kind of, that I wanted to just mention too, is like these ones that, we've got these negatives here. This is the WAGs. It's the one that's finished being furnished. And they're saying, okay, yeah, this is where that memo is finished being furnished, launches operations in May, first dividend projected next month, um, payout in July for the month of June, with first projected a payout, launching operations in May. Interesting. Okay. Um, one of the other ones I had a partial month payout. I don't know why they wouldn't do that if they had some operations in May, but maybe it's going to launch like really at the end of May. But so, okay, they're already accumulating some expenses. So we have some negatives here. Obviously, they're not flowing through those negatives to us because um, they have reserves. One of the things I'd really love to see added to this is, our reserve balance for each of these properties, right? Like, I'm not super worried about it on the ones that are clearly making money, but, especially but it'd be a nice thing to add, right? Like I think that it's something they're clearly tracking, and it is part of our, if you have a large reserve, it's part of the value of the entity, right? And so it'd be good to know. It'd be good to know what that number is for each of them. Not that we can really do anything about it at this point in time, right? Like we can't buy or sell or these on the secondary market. But I like to just track my portfolio and understand what I have. And at some point in time, they are going to start a secondary market, and then um, I don't want to be playing catch up, understanding which ones of my properties are performing how I want them to, and which ones I want to sell some of, right? So anyway, that's all I wanted to mention. Curious how everybody else's portfolio is doing. If you've invested in some of these properties already, feel free to put in the comments which ones you're in and how they're doing. What your percent return is, or if there's something going on any of them that you're curious about that doesn't seem to match up with your expectations. I'd like to talk through that. Jump in the Discord if you want to. As always, the reason that I think that, the reason I'm doing this is I'm trying to create this community where we can all work together to make this, a little bit better for us to invest in on all the different fractional real estate platforms. Mogul has already shown to be really open to doing a lot of things when we ask them. And so if there's things that make sense, I'd like to do that, and have us do it like sort of in a coordinated way. One of the things that I've asked for and was recently told they're not going to provide at the moment is appraisals for some of the properties. And yeah, I haven't gotten a full answer of why not yet. My my representative said he's going to follow up on that, but it was, had something to do with, they thought it would hurt their competitive advantage. I have some thoughts on maybe what they're thinking as far as that goes, but I don't know. So whenever we get a response or I get a response to that, um, I'll share that with the group. But I think that it is, and that, but it's something that they are allowed if they think there's a good business case for doing so to not share certain things. I think especially because it hasn't closed yet, you don't necessarily want to let sellers know, what a property appraised for if it appraised significantly higher than what we're buying it for. I would very much doubt that's the situation. But there's a couple other things that I think could be going on, but I don't want to speculate too much because I did ask the question. I'll just wait for an answer. But anyway, that's everything I wanted to talk about. Let me know how your portfolio is doing. If you like how this is working so far, If if you have complaints about them, because so far, like this really it has quickly, it's become my favorite platform for buying for long-term holds. I think that, if everything continues along the way it's going, uh, with the properties that I've bought so far and that I get throughout this year, um, that sometime next year I'll probably make some significant, some larger investments on here, because it is, they're just these types of yields that they're getting are just not, it's not easy to do, right? They're finding deals that are what I think are significantly better than a typical deal. And I know I've mentioned that a few times, and I think a lot of people get confused when they look at these yields and they compare them to yields on Lofty. Um, but these are not fragile yields in the same way that a lot of the Lofty yields are, right? They're not dependent on a co-owner making a mortgage payment outside of the entity. They also, are not yields that are diluting our equity over time. uh, there are typically interest only payments, so that we're not, they're also not increasing our equity, but we're not getting diluted on the appreciation, so we get the full benefit of appreciation for these properties as well. And so, to be able to, pretty consistently be, high single digits, low double digits, or even some of these, higher double digits is just, or, higher teens is, yeah, it's pretty impressive, and so, uh, if I can do this while sitting on my couch instead of having to go out and buy properties, in real life and deal with the management, it's a pretty compelling platform for me at the moment. And so, yeah, the every month I think as I get more and more comfortable with them, I start to think like this is going to be one that I'm going to feel pretty good about putting a decent chunk on. I think the same thing is going to be true with ground floor. Um, Even though, lesser yields, but I think still, or lesser returns because all you're getting is a yield, but I still think good risk adjustment. And I know I've mentioned these before, but there's a lot of new people that are here, so if you've heard this before, I apologize. But I know I repeat myself all the time anyway, so hopefully you're used to that. But in Lofty, I've really started to worry a little bit about having too much on that platform. Although the announcement that went out today made me feel a little bit better as far as, the management team at Lofty actually maybe taking a little bit more of a role in dealing with the Yom debacle over there. So, if you don't know what I'm talking about because you only watch the Mogul playlist, it's not that important. But if you want to jump into that discussion, just look at the last couple of days of videos and you'll know. In any case, that's really it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to.